Ever get the feeling that businesses are playing by a different set of rules, especially when it comes to taxes?
Oh, absolutely.
Well, today we're taking a deep dive into a story that's going to make you wonder if it's all just a game.
Buckle up.
We're talking about Reliance Industries in India and how they managed to pay zero income tax for, get this, 30 years.
30 years, that's right.
Reliance Industries is a huge deal in India, right?
Massive player. Yeah, absolutely. A true giant in the Indian economy, you could say.
Yeah.
They've got their hands in everything. Telecommunications with Geo, you've got energy petrochemicals. They're everywhere.
So we've got this corporate giant pulling in huge profits. They're even paying out dividends to shareholders as high as 25%.
25%. It's incredible.
But somehow no income tax. How's that even possible?
It's not like they were evading taxes illegally or anything like that.
Right.
They were actually really clever about it. Reliance knew how to play the system to their advantage.
So how'd they do it?
Well, they found this gap between two different laws, the Income Tax Act and the Companies Act, and they exploited that difference to their benefit.
Ah, so a loophole.
You could call it that, yeah.
I see, I see. So looking through the sources, it seems like depreciation was a key part of their strategy.
Yeah,
Can you break that down for us?
sure. Depreciation is basically the idea that things lose value over time.
Okay, makes sense.
Like if you buy a car for your business, that car's value goes down each year, right?
Right.
That's depreciation. And Reliance found a way to make that loss on paper look way bigger than it actually was.
So they were writing off more than they should have been.
Exactly. They took advantage of this loophole that let them inflate the value of their assets by factoring in something called future interest on borrowed money.
Interesting.
And that led to these massive depreciation claims, which then wiped out their taxable income.
Sounds like they had a whole team of financial wizards working behind the scenes.
They definitely knew what they were doing.
And it worked for them for quite a while.
Yeah, for a long time they were ahead of the game. One of our sources even mentions this interesting story from 1983.
Oh, yeah.
Yeah. The finance minister at the time, Pranab Mukherjee, he tried to close this loophole.
So he saw what they were doing.
He did. He tried to impose a 30% tax on profits after depreciation.
You'd think that would stop them.
You'd think so, right?
Yeah.
But Reliance always seemed to find a way around it.
So they just kept on going with their zero tax streak.
They did. They were pretty resourceful.
It's like a David and Goliath story.
Uh-huh. Yeah, I guess you could say that.
Reliance, this corporate giant, outsmarting the Indian tax system for decades.
For decades.
But even giants eventually meet their match, right?
That's right, they do.
Yeah.
The Indian government eventually realized that companies like Reliance were, kind of slipping through the cracks.
Yeah.
So they decided it was time to even the playing field a bit.
And how'd they do that?
In 1996, they brought in this new rule,
Okay.
the minimum alternative tax, or MISS.
Yeah. MAT. Okay. So what exactly is MAT and how did it change things for Reliance?
Well, think of MAT as kind of a safety net for the government's tax revenue.
Okay.
It's like the government saying, look, we get it. You're really good at finding these deductions, but you're still making a ton of money. Right. You're going to have to pay at least a minimum amount of tax no matter what.
I see. So no more getting away with zero tax, even if they could bring their taxable income down.
Right. And it's calculated as 15% of their book profits.
So no matter how many deductions they manage to find, they still have to pay something based on their actual earnings.
Exactly. That's the idea. And you know what?
What?
It had a huge impact on Reliance.
Really?
Yeah. For the first time ever, they actually started paying taxes.
Wow. So the government finally managed to outmaneuver this corporate giant.
Pretty much. But it does raise some interesting ethical questions, right?
Yeah, I was just thinking that, it sounds like Reliance was really exploiting these loopholes, even if it wasn't technically illegal.
It's definitely a gray area. Some people argue that Reliance was just being smart. They were playing by the rules.
Yeah, maximizing profits for their shareholders.
Exactly, which is what businesses are supposed to do, right?
Right. But then on the other hand, you could argue they weren't exactly fulfilling their social responsibility.
That's the other side of the coin.
Yeah.
They were kind of depriving the government of funds that could have gone to important public services.
And I wonder how public perception played into all of this. A company that's seen as dodging taxes, even if it's legal, might face some backlash from consumers.
Oh, absolutely. People are a lot more aware of these issues these days, and they're more likely to factor ethical considerations into their buying decisions.
So maybe the introduction of MAT was also a response to that,
Yeah.
addressing public sentiment that these profitable companies should be contributing more.
It's possible. It definitely seems like it was a way to create a fairer tax system and address those concerns.
So the government steps in, levels the playing field. But Reliance, being Reliance, they didn't just give up, did they?
Not at all. They're a very adaptable company, and they adjusted to the new rules.
I mean, they continued to be successful,
Good,
right?
yeah. Even with the added tax burdens, they were still thriving.
Which suggests that their success wasn't just built on tax avoidance.
Right. They clearly had a strong business model and understood the market.
That's a good lesson for any business, being able to adapt and navigate changing regulations.
Absolutely. It's key to long-term success.
So we've talked a lot about Reliance's tax strategies and the impact of Massia, but this story has much bigger implications, don't you think?
It definitely does.
Yeah.
This might be specific to India, but it reflects a global trend.
Like what?
Corporate tax optimization. Companies all over the world are constantly looking for ways to minimize their taxes.
Especially those big multinational companies.
Exactly. And they often do it by exploiting differences in tax laws between countries.
It's like a giant game of financial chess.
That's a good way to put it. And governments are trying to keep up, trying to make sure everyone's paying their fair share.
It's a tough challenge, though, right?
It is. The OECD, for example, is working on something called a global minimum tax.
Oh, yeah, I've heard of that.
It's an attempt to prevent this race to the bottom, where countries keep lowering their tax rates to attract businesses.
Sounds like a complicated issue with no easy solutions.
It is, but it's a really important conversation to be having.
Absolutely. So as we wrap up this deep dive into Reliance Industries and the world of corporate taxes, what are some key things our listeners should take away from all this? It's a wild story, right?
Oh, yeah, it's a real eye-opener.
Reliance Industries and their zero tax run, it feels like something out of a movie.
It does kind of makes you think.
So for our listener who may be just tuning in, what are the big takeaways from all of this?
I think this case really highlights how complex the relationship between corporations and governments can be.
Especially when it comes to taxes.
Exactly. It shows how strategic companies can be about minimizing their tax burden and how governments have to constantly adapt to keep things fair.
It also raises questions about a company's role in society, right?
Absolutely.
Yeah.
Is it all about maximizing profits? Or do they have a bigger responsibility to contribute to the greater good, especially when they're making a ton of money?
It's a debate that's happening everywhere.
It really is. And this Reliance story is a perfect example of that. What's interesting is that this isn't just an India thing.
Oh, you mean like what Reliance was doing?
Yeah, we see similar things happening all over the world. These discussions about corporate tax avoidance and the need for international tax reform, it's a global issue.
Yeah, we hear about these multinational companies shifting their profits to countries with lower tax rates all the time.
Exactly. And governments are trying to figure out how to make sure these companies pay their fair share no matter where their profits are officially recorded.
It's like a constant game of cat and mouse.
You could say that. And the OECD's work on a global minimum tax, that's a big step towards addressing that.
It's a step in the right direction, for sure.
It's a complex issue, though. No easy answers.
Definitely not. So what can our listener take away from this deep dive into Reliance Industries and corporate taxation?
I think it shows that even something like taxes, which might seem boring or technical, can actually be pretty dramatic and full of strategy and even ethical questions. It encourages us to look deeper and think critically about how corporations operate, how governments respond, and this constant tension between profit and doing what's right for society.
It's also a good reminder that being informed is important. When we understand how tax systems work and what strategies companies are using, we can have more meaningful conversations about fairness and accountability.
Absolutely. And hopefully it shows that change is possible. The introduction of MAT in India shows that governments can adapt and close loopholes to make sure that even the most profitable companies are contributing to the common good.
So to wrap up this deep dive, we encourage our listener to keep exploring these issues. Maybe look into your own country's tax policies or do some research on the practices of companies you support. Ask yourself, what role do I think corporations should play in creating a fairer and more equitable world?
There might not be easy answers, but asking these questions and staying engaged is crucial for a more informed and responsible future. Keep learning, keep questioning, and keep the conversation going.
So that was today's episode of my Side Hustle Weekend podcast. For everyone listening, if you're ready to take action on what you learned today, here's where you can find more resources. First, head over to sidehustleweekend.com. I've put together detailed guides, templates, and case studies. And while you are there, don't miss out on my free newsletter, Side Hustle Weekend. If you found value in today's discussion, hit that like button and subscribe to join our Weekend Hustlers community. Turn on notifications so you don't miss our episodes where we break down more side hustle strategies. Check the description below for all the tools and resources we mentioned today. Remember, everyone's journey starts with a single step. Whether you're looking to make an extra $500 a month or build something bigger, start with what you learned today and take action. So, thanks for tuning in, and I'll see you in the next episode where we'll break down another practical way to grow your income.